Let's focus on financial institutions and the ability of financial institutions to raise capital going forward. Yeah. And actually, there's so much happening on the financial institution side. Standard Chartered itself, I'm sure, is taking on a number of tactical opportunities that are coming through from the crisis, mergers and acquisition and so on. What is the market looking for in terms of if a bank went to market to raise capital today? Is it a question of pricing? Is it a question of a good story? And what are the critical success factors that plays to that?
I think there are many issues raised by your question. Not everything broke in this financial crisis. Parts of the financial system still worked and operated well. Some banks, like Standard Chartered, did incredibly well, and touch wood, will continue to do well. But one of the reasons I think Standard Chartered will do well, and some other banks will also do well, and is linked into the second part of your question about what people look for in rights issues. We at Standard Chartered are very committed to our strategy. We have a clear strategy. Not only are we committed to that and to organic growth and strategic acquisitions when necessary, we're also very much committed to our customers. And you mustn't lose the sight of basics of banking. You need to actually hold yourself together and run yourself well. And I think when people look at rights issues, whichever bank it is, I think investors will be looking for a good story. Price is always an issue, but I think it's a clear recognition that whichever bank it is has a strategy, and raising this money will help it achieve that strategy.
Right, and in that context, I'm always very surprised why Japanese financial institutions continue to be attractive to investors despite the bad news that just keeps coming back onto the marketplace. I mean, especially today's...
well, to be fair to Japan, Japan did restructure its financial sector, its banking sector, as it went through the latter stages of its crisis. Japan had its Lehman's moment in the autumn of 1998, when in the space of 2 weeks, Yamichi, Sanyo Securities and Hokkaido all collapsed.
Right.
And that finally forced the Japanese to force through a major restructuring of the banks. Now, Japan, despite the apparent dismal data recently, it is still, like Germany, a high income, albeit slow growth economy.
Right.
Japan has huge domestic savings. So I think one needs to sort of be careful and very much judge
in the
things.
last 3 to 5 years, any major investors gone into Japan hasn't seen that ROI, and the NPRs just keep coming back, every 2 years. So
yeah, well, I would say that obviously you need to judge each economy on its own merits, and the banking sector there in each economy against that backdrop. I would actually say when one looks at this crisis, it's to step back and recognise the crisis was caused by a number of factors: a failure to heed the warning signs, a systemic failure in the financial system, but also by an imbalanced global economy. In coming years, we're likely to see a move towards a more balanced global economy. That favours increased investment in emerging economies, particularly across Asia, particularly across the Middle East, also given the commodity story across Africa, and there will be winners outside of those regions like Brazil. So I think it's a great opportunity to not only invest in those countries, those markets, but also in banks and financial institutions that are geared to actually being part of that growth story.
A number of countries took on very strong fiscal measures. What do you see the landscape turning into in the next 18 months on a country-by-country basis?
Yeah.
Like, which countries can afford to go into a deficit, and which countries should not have done that, and who the winners and losers be?
I think it's important to stress that fiscal policy does work. And if people are not spending, if companies are not spending, then it's important that governments do step in. The OECD, Organisation for Economic Cooperation and Development, showed a good analysis earlier this year of how different government spending can be more effective in certain ways than others. Basically, if the government spends the money, it has a bigger multiplier effect than if the money is given in a corporate tax cut.
The question is at what cost? Because
the important thing is to try and get recovery. Now, what cost? Yeah, the markets worry about whether there's an inflation cost and whether there's a supply issuance, whether countries will be able to fund their deficits. Again, one needs to look at countries on a case-by-case basis, but recently we've had concerns about America and Britain. Complete nonsense. There is absolutely no way the US or the UK should ever be downgraded. What we see are the rating agencies recognising challenges, but that is a domestic political issue. Painful political decisions have to be made eventually on tax increases or spending cuts. The US and the UK will be able easily to raise the finance and fund themselves. Yields might have to be slightly higher. I think the key determinant will be the inflation outlook.
That's right.
And I do not think inflation is a problem. I do not believe there's a near-term inflation
problem. And that's
problem.
because?
That's because the world economy has taken a big hit. There's lots of spare capacity. There's no wage pressures in the system. I think central banks will be able to withdraw the liquidity. I think the inflation challenge that we face is one maybe 3, 4, 5 years away, and it's not possible to say with precision, but is more a cost one from commodity prices. I don't see wage pressures there. I don't see monetary policy pressures triggering inflation. People seem to go from one extreme, fearing depression and deflation, to the next minute fearing inflation. Maybe those knee-jerk reactions can be sort of understandable in such a volatile environment, but they need to be put in perspective. Inflation is not the problem.
A final question: are there any blind sides that we need to be aware of? The role of hedge funds, the recreation of leverage in the markets.
I think it's important to point out levels. Equity markets have rallied sharply from their bottom, and the growth rates seem spectacular, but they're still well below their peak. October 07 to now has still seen a massive loss of wealth. So we need to put that in perspective. The positive is that we are seeing a return of stability to some parts of the market. We're seeing a return towards normality. That's good for many different areas. We're likely to see more IPOs, or some IPOs in this part of the world soon. We're likely to see hedge funds, as you say. We're starting to see a return of liquidity, some pickup in leverage. But let's keep it in perspective. And it's not like the boom. We're not going to see a return to the boom. But I think maybe the concluding point is that, unfortunately, there are many false dawns in the recovery. And if markets become too optimistic too soon, they may be disappointed. I think one needs to therefore remain cautious, keep one's wits about one's investment, and try and look for underlying longer-term value.
If just in the next 6 months or so, the banks that have been growing their loan books too quickly, if they came back and said, our NPRs are also starting to show up, would that have an adverse effect on the marketplace?
Well, I think it depends on the overall economic climate. Now, I think the important point is to say that as part of a normal business cycle, there can be a pickup in bad loans and an increase in delinquencies. Normally banks go into a downturn in pretty good shape, able to handle this. Some banks naturally are more fragile now because of what's happened. But I think it's also important to stress that we're coming towards the bottom of this cycle. Unemployment will still be high in many countries. It might still feel like a recession on the high street in some countries. But the important point is that there is now light at the end of the tunnel. And very importantly, I think official or policy interest rates will remain low, and that will help us through the adjustment phase.
So the environment is able to absorb any more bad news?
I won't say any more bad news, but there's always going to be bad news. It depends what the bad news is. We should not be surprised if there are further shocks. But I think it's also important to stress that the outcome depends on fundamentals, policy and confidence. We've seen a big hit on the fundamentals. We've seen a massive boost from the policy, and thankfully we're now seeing confidence recover.
Dr. Gerard Lyons, thank you very much.
Thank you.